Hey, what's up, guys? I just want to make a quick video, kind of go over my strategy. I don't know if it's a strategy, but just kind of what I look for going into my trading days, and kind of briefly explaining what I look for and how I enter my trades. And this is how I typically get funded. These are the trades that I typically take to try to pass my funded accounts. If you guys are interested in futures prop firms, click the link in the descriptions and use my code if you guys want. And yeah, let's see. So before, my trading style is pretty simple. If you guys know ICT, I don't trade order blocks, breakup blocks. Typically, my only two focus are primarily liquidity and fair value gaps. That's pretty much it. So swing highs, swing lows, and fair value gaps. That's simply it. And if you guys aren't, familiar with what a fair value gap is, basically what a fair value gap is just a 3 candlestick pattern in which the first wick and the third wick do not overlap. So there's kind of a void in between, like this right here, right? And this is another bearish example. So in this bearish example, the first candlestick, the bottom of this first candle and the top of the third candle, these candlesticks do not overlap. And this is what creates a fair value gap. And so here would be an example of what a fair gap wouldn't be. So let's say we have like a big wick like this, right? Since they now are overlapping, there is no fair value gap. But if I were to get rid of this, whatever, see, there's a void in between, right? So that'd be your fair value gap. And basically why this is important is it indicates a lot of buying or selling pressure. Buyers and sellers are not equal. And since the market likes to be at equilibrium, market likes to offer fair price, what you oftentimes see is price will return to these levels. Price will often return to these levels and then continue in its intended direction. We're just gonna rebalance real quick, and then continue off in our intended direction, and vice versa. If this were the bearish example, we will oftentimes see some sort of retracement back into these levels and then continue back in our intended direction. And this is just pretty much the basis for all my trades. But yeah, this is the first example that I will go over you guys. I'll go over some more examples that I've taken and maybe some live trades, but this is typically what I'm looking for. So now that we know what like a fair value gap is, when we see a bearish fair value gap, what you would oftentimes see is what we would want to see is some sort of bearish reaction and continue lower, right? But this is why you need higher time frame context. These are just entry models. I want you guys to understand that higher time frame bias, you need some sort of higher time frame context for all these trades. Everything that I'm taking is just an entry model. It doesn't mean anything if you don't have a higher time frame bias. So in this example, right, we actually enter, so let's say we enter some sort of higher time frame, like maybe 4 hour, 1 hour fair value gap, or maybe we sweep some sort of sell side liquidity, right? I would want to see us have some sort of bullish reaction, even though there is a bearish fair value gap, even though like what I just explained over here, right? You'll oftentimes see us have some sort of bearish reaction, right? But if it's the higher time frame, right? If we sweep some sort of sell side liquidity on the higher time frame, or we entering a 4 hour fair value gap, right? Typically, most oftentimes the higher time frame will win, right? So in this example, I would probably look for longs, right? But what I would want to see before that is this bearish fair value gap to get disrespected. And when I say disrespected, I want to see a close above. So when I see a close above, that means there's a lot of buying pressure going on, and I wanted to enter longs and try to catch the ride all the way back to the buy side liquidity or my other draw on liquidity, right? And like I said, when we are in a bearish fair value gap, what you would oftentimes see is some sort of bearish reaction, right? Continue lower. But in this case, it would not make sense, right? Because we are entering some sort of higher time frame, right? And like I said, higher time frames are typically most likely going to win and beat out that lower time frames. So this is why I would be looking for some sort of long opportunity, right? And this is why I would zoom in and I would look for an entry. All these examples that I'm about to show you are just entries. They are not a reason why you should take a trade or whatever. You need higher time frame context, right? That's the most important part of this. And I'll show you guys examples later. So the first entry, this is a very aggressive, this would be called an inversion fair value gap, and it'd be an inversion because obviously we close above it, right? When we see a fair value gap, you want to see bearish reactions, right? But if we close above, that means we're disrespecting it, and maybe price could be potentially reversing and heading higher. So basically all I would do is wait for a close above. And all these examples I'm about to show are just bullish examples, but it's pretty much the same thing with bearish examples. You'd wait for a close below and whatever. But yeah, I would typically wait for a close and put my entry right here. I could put my stop below the bearish fair value gap. This now becomes an inversion, right? So this would now become an inversion, a bullish inversion, right? Oops, sorry. And I would put my stop below here, or I could the swing low and probably target some sort of buy side or my other draw on liquidity, right? Or, you know, whatever swing high or swing low that you're aiming for, right? So the one downside with this is a very aggressive entry model simply because you're not waiting for a market structure shift. You are not waiting for a market structure shift. So your market structure shift would be like right here, right? In this trade, you are taking as soon as this candle closes above, as soon as we get a candle close above like this, right? So say we get a bullish, not a fair value gap, but let's just say this is just a bullish candlestick, right? As soon as we close above, I am entering. Of course, like I said, I have a higher time frame narrative or context backing my trade already. I have a trade idea in mind already. And that is simply why I'm taking this trade. And it would look at something like this, right? Or I could have my stop below like the bearish fair value gap, right? So this, if you want to do that, but probably just safer to do this. That is entry number one. And the one downside with this is, like I said, is very aggressive because you're not waiting for your market structure shift. There is no market structure shift. You're trying to basically play before the market structure shift happens. And this is a very high risk to reward trade. And I just want you to, just a quick tip, when you guys see two inversion fair value gaps, I always like to wait for maybe just one. The best case scenarios are when you get one bearish fair value gap only, right? And we close above. Because if you get multiple, or let's say two for this example, right? If we get two bearish fair value gaps, and say price goes in and yeah, we close above this one, right? And I enter this trade right here, sure. Stops below here. The reason I don't like these trades with multiple fair value gaps in this area is because that this could happen right here. So say I enter a trade, right? And you're sure I'm in, right? And yeah, it's going in my favor for now, right? But this other bearish fair value gap, what if we have some sort of reaction out of this one, right? And we continue lower and you can immediately get stopped out, right? That wouldn't be good, right? It's always best to wait for the close above, right? It's always best to wait for like a close above all the other, so you don't have to worry about which one's gonna hold or which one's not gonna hold, right? But the problem with this is the risk to reward is not as good, right? Because your stop would be below here or right here, and if you put your stop below here, you might get wicked out, right, or something. But if you put your swing low down here, if it fails on you, like obviously you're gonna lose pretty big, right? So it's always best to just wait for, like, if you have one fair value gap and we close above that one, right? That is the best case scenario. So that is example number one that I kind of quickly go over. But this is another variation, but better examples. Oh, sorry, I'm just gonna cancel that real quick. This is another example that I would much rather you guys take, and one I'm a lot more confident on, and is basically not taking the first initial play. We are not taking the first initial close above, but instead we're waiting for some sort of market structure shift. And after we enter some sort of higher time frame point of interest, right, we will basically get a lot of displacement and speed. What you guys want to look for is displacement and speed, right? You want to see a lot of buying pressure out of this area, right? Indicating that this could be some sort of point of reversal for us to head higher, right? You don't want to guess, right? And that's why it's important to look for speed and displacement. And typically when you get speed and displacement, it will be followed by fair value gaps, right? So this example is a lot better than this one, right? Simply because there's a lot of speed and displacement, but not only that, we also get another market structure shift, right? We break structure to the upside, right? And like I said, what you oftentimes see in this example, these examples, is a bullish fair value gap created from that, right? And what you would want to do is wait for the retrace into one of these, into this fair value. It could be multiple, whatever, but this entry is a lot safer because now not only this becomes a BPR, a balanced price range, or inversion fair value gap, whatever you want to call it, right? So now that these are overlapping, right, we disrespect a bearish fair value gap, and not only that, we created a bullish fair value gap in its place, right? So that's just screaming bullish price action to me. So I would want to get involved somehow, right? These, and like I said, these are just entry models. You need some sort of higher time frame context or bias or narrative, right? These are just entry models. It's just basically asking yourself, how can I get involved into the trade, right? If I have a bullish bias, how can I get involved? And this is how you get involved with these entries, right? So like I said, I like this example a lot more because yeah, we'll close above a bearish fair value gap, right? We'll have a market structure shift. You want to play the retrace, right? You would want to play the retrace into this fair value gap, and your stop would be a lot better, right? So it could be below the inception of the fair value gap, right? Or the swing low, whichever one you're more comfortable with, right? And then target the other buy side liquidity or drawn liquidity that you already originally had, right? A lot better trade in this one. This one's a lot safer. Like I said, this is a fair value gap entry slash BPR entry, right? Because these are both overlapping, right? You see how we return, because inversion fair value gaps as well, right? I just want you guys to know that when, let's say we don't get a bullish fair value gap, right? So let's say there was no bullish fair value gap. Oftentimes what you will also see is these inversions will be, you know, points of interest where we could have some sort of bullish reaction, right? So we could still return to like this originally bearish fair value gap, right? We disrespect it, close above, but we'll sometimes return back to it, and then we could continue higher. But for the most part, I will say that you guys will sometimes get a bullish fair value gap, and that those are your best trades, right? And then finally, this last example is probably my favorite, because it's kind of slapping everything that we were talking about earlier together and kind of combining it. So like I said, every trade you need some sort of higher time frame context, right? So like I said, same thing, higher time frame context. These types of trades will typically offer 3 different entries, right? The first entry, the very aggressive one. The second one, a little bit more confirmation, right? With the bullish fair value gap example. But this one, I like a lot more, right? And I'll explain why. So, yep, same thing, right? We'll close above. We'll get some sort of market structure shift right here, right? Market structure shift. Like I said, we swept some sort of sell side liquidity on the higher time frame or enter a bullish fair value gap or whatever, right? And not only do we re-enter into this bullish fair value gap and we're having some sort of reaction, right? What's so important about this is on the retrace down, let's say we get a bearish fair value gap, right? And we disrespect it, right? And we close above once again. So we close above with the bullish, a bullish candle like this, right? Once we close above, this is my other trade right here. And my stop would be, you know, below the inception of the fair value gap or like the swing low, and then I target. And this one is a lot safer. I've won a lot of trades on this. I've got fun. This is how I've gotten funded. These are my favorite types of trades where we close above a bearish fair value gap while delivering from a bullish fair value gap, right? So we disrespect a bearish fair value gap, right? Why you would not want to short this bearish fair value gap, right? Because why would you short here? It wouldn't make sense. Why? Because we are delivering from a bullish fair value gap. We are delivering from a bullish fair value gap, right? Price is indicating that we probably want higher, so it would not make sense for you to take a short right here, right? It just wouldn't make sense. Once I see that we disrespect it, obviously, like I said, this is what I'm anticipating, right? If we're delivering from a bullish fair value gap and we are on the higher time frame bullish or whatever, we retrace into, and we're having bullish price action, why would you want to short here? I'm anticipating this to get broken and get closed above. So once it closes above, that's my confirmation. I'm in, right? Like I said, you have your stop below the fair value gap, the inversion fair value gap, or the, what do you call it? The swing low, and then target the other buy side liquidity. And that's pretty much it. And I'll go over some examples right now. But so yeah, let's go. So this is what I'm talking about. Higher time frame context, right? This is the 15-minute. Sure, it's not higher time frame like 1 hour, 4 hour, but this is typically what I look for. So I see that we're accumulating right here, and all of a sudden we get some sort of manipulation down, right? And we have some sort of large wick and a lot of displacement, right? Obviously, I was already bullish. I understand that there's a bearish fair value gap here, but I was already bullish on the higher time frame, and this was kind of screaming, okay, we swept sell side right here. We didn't really displace lower. Maybe we want higher prices, right? So like I said in my notes right here, I want to see a retrace into this fair value gap, right? technically, yeah, you could have entered off of this bearish fair value gap, sure. Like we said, like the first example, right? Oh, where is it? Right here. So the first example, like I said, yeah, you could close, but there's no, once you close above, right? The risk to reward on this is ass, right? Your stop would be like down here or something, right? So it's not good to wait for this inversion, right? What you would want to see, so in that scenario, right, I would want to see a retrace into this bullish fair value gap, which is this example, right? This example right here. I want to see a retrace back into this fair value gap, right? And let's see what happens. So on the 15 minutes, so now I zoom in back into the 5, and it's the same thing, rinse and repeat on the higher time frame, right? On the higher time frame, we swept liquidity, right? 5 minute, right? So this was on the 15 minute. So now back on the 5 minute, we swept liquidity, sell side liquidity again, right? So we enter this fair value gap, and I want to see some sort of confirmation, right? Look right here, we close above, right? We close above, right? And you could take that entry. That's totally fine, right? So this is the first entry, but I don't like the risk to reward on this, right? Because it is, my stop would be probably down here, which is a little bit too big for me, right? So I said, right, I literally drew it out here. I want to see a retrace back into this bullish fair value gap that we created, right? Same thing. You're just stacking models inside of models. So this is right here, right? I hope you guys could see this. I want to see a retrace back into this fair value gap, right? Once I see this bearish fair value gap get disrespected, right? That's my confirmation. Okay, possibly this could be a point of reversal, right? But why is that? On the higher time frame, that is what I was already anticipating, right? Retrace into this fair value gap and then continue higher, right? So that's what happens right here. Stacking models inside of models, and let's see what happens. Boom, I get my entry right here, right? I saw we fill in this fair value gap and we're still holding it. My stop is the bottom, or the bottom of the candle, the fair value gap inception candle, right? Where it was created. That's basically my stop. Technically, it should be down here or whatever, but this is what I'm comfortable with. And boom, we take off. I suck at executions. I got enough profit. That was enough for me, and I got out of the trade. But you see, we just kind of take off. And then and then I'll show you guys one more example. All right, so this is the second example. This is a little bit more recent. This was May 16th, but on the higher time frame, right? I think, okay, so this is on the 5 minute. Usually I'll do my charting on the 4 hour, 1 hour, 15 minute, 5 minute, and the 1 minute. But let's just say, so on the 5 minute, we're kind of accumulating right here, right? And what I typically want to see is us sweep some sort of sell side, right? Like I said, I want to see a higher time frame point of interest getting swept, or we're entering a bullish fair value gap or something, right? So in this example, right, we're approaching this level, right, that I had drawn out right here on the 5 minute. This is on the 1 minute, right? We have the sell side right here. I want to see right here, and we swept sell side, right? It was a little choppy, sure, whatever. And there was really no inversion fair value gap right here. Okay, sorry, there was one right here. So we inverse this, right? As soon as we see this, right, we don't enter it and then continue lower, right? We oh, what the fuck? Sorry about that. Yeah, so we enter this fair value gap, right, or bearish fair value gap, but we don't respect it and head lower, right? We disrespect it, close above. So now, like I said, same as this example, the previous example I showed you guys. I was not comfortable with the risk, right? It was the stop was too wide for me. What I want to see is a retrace into this fair value gap. A retrace into this fair value gap and us take off. And so I saw that, right? I saw this. We disrespect this bearish fair value gap. We re-enter into the bullish fair value gap. That's my entry right here. I don't know why I had my stop at the low, but I guess I was anticipating that to be the low. Technically, it should be down here. And target the nearest buy side liquidity. And boom. Immediately take it, and then we kind of dump. But by then, I was already out of the trade. So, yeah. And yeah, that's pretty much it. That's pretty much all I have for you guys. It's not anything fancy. I do have another model that I kind of use. It's the turtle soup. But that one's a little bit more advanced and complicated. I definitely have a lower win rate with that, but I'm telling you guys, if you use this sort of entry right here, this is all you need to get funded and pass the account, right? It is free. not free, but obviously this won't happen and work all the time like any strategy, right? There's no 100% win rate strategy, but for the most part, you do see a pretty good win rate and pretty nice returns if you catch the bottom of the move. But yeah, you don't need to overcomplicate ICT trading. It's just for me at least, fair value gaps and swing highs, swing lows. That's pretty much all I need. And I'll definitely use other concepts like power 3 or market maker models to, you know, back my trade, but that's on the higher time frame, right? The higher time frame is kind of for me to form some sort of trade idea, right? And these 3 different entries are the different ones I use for like I said, entries, right? They're how I get involved in the trade. And you could kind of play around with it and see which one that you want. All right, guys, so now I just want to kind of go over an example of a trade I think I took today. Today's May 6th, so pre-NFP. Price action was kind of today, but I'll just kind of go over the trade I took. But so let's see if I could find it on the 1 hour. I think on the 1 hour I had some sort of point of interest. So this is what I would typically do, right? I would kind of draw out some sort of point of interest on the higher time frame, right? So like I said on this one, right, in this example, we enter a bullish fair value gap, right? We are entering a bullish fair value gap. So I would zoom in. I would typically go on the 4 hour, 1 hour, 15 minute, 5 minute, and then the 1 minute, and I would execute on the 1 minute. But so on the higher time frame, we are entering a bullish fair value gap on the 1 hour, right? So on the 1 hour, and I would just keep zooming in until I saw something interesting. But let's just say for now I go enter on the 1 minute. In the morning, we're kind of just consolidating and we weren't really doing much. And after a little bit, we kind of sold off. And we entered a point of interest that I had drawn out. Like I said, the 1 hour bullish fair value gap. We did close it below it a little, but we immediately rebalanced, right? So we immediately rebalance. Closing below is fine, right? It's totally fine. Technically, yeah. So we did close below the bearish fair value gap, right? But we were still like, look at this. Like on the high time frame, we were just bullish, right? We just keep going. And what I absolutely do not want to do is short all-time highs. We are at all-time highs. I just do not want to short, right? I'm just not interested. I've taken too many L's trying to short the top. So I was still looking for longs. The structure was kind of, it wasn't clear, but I was anticipating us to kind of maybe aim for these highs. We had news candle high right here, so I was kind of targeting that. That was kind of my bias going in the morning. I wanted to take that. We almost took it at the open, but not really. So I still had a bullish bias going in the morning, right? So like I said, so now that's my narrative or bias or context or whatever. I'm bullish, right? And the other context is we're in a bullish hourly fair value gap, whatever, right? So now I want to see how we could kind of react at this level, right? So now that you guys know, but I want to see how it would react at this bearish fair value gap, right? Do we continue higher, or sorry, do we continue lower from here, or do we disrespect it, close above, and continue higher? And which one matches my game plan? Obviously the one where we disrespect it and continue higher, right? That was my game plan. That was my higher time frame bias, right? So I want to see it close above and us continue higher, right? So let's see kind of what happens. And I think, okay, so right here, boom, we close above. This would be my entry, right? And you could have 2 different times to stop. Maybe you could have your stop below the fair value gap like this, below the bearish fair value gap, right? Or at the swing low. This one's probably safer, right? But you're putting on a lot more risk. But let's just say, for example, I put it right here, right? Let's kind of just see what happens. And boom, right here. And this is the second entry that I was talking about earlier, right? Let's say you don't quite take this first entry, right? Because you weren't confident in, right? This is your bullish fair value gap. And what I would want to see is a retrace back into this level, right? And continue higher, right? Oh shit. Something like this, right? I would want to see something like this. So let's kind of see what happens right here. Okay. So there's my tap. So let's say I already took profit on this, right? So let's just say for the inversion, I already took profit or whatever, right? So now I'm playing the retap into this this fair value gap, and I want you guys to also understand that there is another one right here, right? So we could tap into either one. I want you guys to understand that we could tap into either one, right? So let's see. Ideally, we tap into the first one and take off, but I can totally see us tapping into the second bullish fair value gap, right? And continue higher. So let's just kind of see what happens. Let's say I bought right here. My stop would probably be like I said, still below the inversion fair value gap. That's probably the safest spot. And okay, and boom, you see how aggressive that we get this buying right here into the second. So we dig into the second fair value gap. We were already anticipating, right? Because there's 2 fair value gaps. And there you go. Obviously today was pre-NFP, so the price action wasn't too clean, but this is kind of an example I kind of want to go over you guys, right? So let's say you first took the first initial tap, right? That would be entry. If you waited for the second bullish fair value gap, this was the entry right here, right? Still stop, still below right here, and let's kind of just see what happens. And there you go. It's kind of not too clean, right? And let's just boom. I took profit, whatever. But I also want you guys to see that we are delivering from this fair value gap, right? This was a pretty good trade, in my opinion as well. We swept sell side again, right? This is another trade. I took this on. I also took this trade, but I got out a little bit early. This is the third entry model that I was talking about with you guys earlier. So we sweep some sort of sell side, right? We inverse the fair value gap, right? Oh wait, I guess it's not here. Oh yeah, sorry. We're delivering from a bullish fair value gap, right? This is entry model number 3. And then we disrespect a bearish fair value gap, right? We disrespect it right here, right? Why would we not anticipate this to hold and continue lower, right? Because we're already bullish and we're already seeing all the bullish price action. Oh shit. We're already seeing all the bullish price action that we wanted to see, right? I would anticipate that for this to get closed above, and this is my best. These are my best types of trades. I would wait for the close above, right? Why? Because we not only do we sweep sell side, but we're also delivering. We're delivering from a bullish fair value gap, right? And I'm anticipating this to get disrespected and closed above. And once it does close above, my entries like this, right? Stop below here, and then not only that, we also get another retrace into this fair value gap, right? This BPR. So another one, right? This is another entry. So I guess this is entry model number 2, right? So another bullish one, right? So retap into this, right? And boom. There you go. But yeah, that's pretty much all I got. If you took those trades today, great. If you didn't, also great, no problem. There's 1 million different strategies to make money. This is not the only one, but this is what I've kind of found success with. I hope this helps. Good luck in your trading, and peace. Subscribe or I'm gonna lick your balls. Thank you.
Subscribe!